Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look on the gold market. So actually this week it was a pleasure to trade gold market just because it has shown the performance that very accurately has followed our trading plan, which is more interesting that currently we have a big divergence between the performance of the, for example, euro currency or other currencies that traded against the dollar and the gold. And the difference in the performance tells us that the major background stands not in the United States dollar per se, but in the specific issues of the particular assets. And in our case, this is the gold market. So everything's going with our analysis. And we even approximately a month ago, we said that be prepared that gold will be under pressure. Just we have some financial, fundamental and tactical reasons to suggest that demand for the gold in nearest time will be decreasing, or better to say not the demand for the gold, but I would say more the supply of the gold will increase, just because investors will start thinking about rebalancing the portfolios on a new reality. And they're searching for chances to accumulate some interesting bearing assets, some risky assets, and on the background of the changing the rhetoric of the Fed. So that's unavoidably will make some pressure on the gold. Second holding and factor for the gold is headwind, I would say. And some kind of that's inflationary protected notes shows the positive yield level. If few months ago it was in negative territory, currently it turns to the positive area. It means that, of course, it is arguable whether they reflect correctly the level of the inflation, but this is the fact. This is most common way to take a look at the core interest yields, and they are positive, which will also make pressure on the gold market. Finally, surprising performance around Bitcoin and cryptocurrencies have boosted demand for the crypto assets on the background of the BlackRock activity. So all this stuff create short-term negative background for the gold, and the gold probably remains under pressure in the nearest few months. The rest analysis of the fundamental background hasn't changed too much, and actually we keep our view that in perspective on 1-2 years, gold could become a really great opportunity for investing. And we think that any retracement currently is a good chance to accumulate more physical gold. But we are talking about buying the gold without any leverage, without any margin. So if even you just holding positions with the gold, in some futures, for example, not physical way, you just should do this without any margin, without any leverage, or at least not much than 50% leverage. So that's what I called with the investments. But mostly this is, of course, the buying of the coins, bullions. So that's usually people do when they intend to invest in the gold market. And we think that this should be a great opportunity, and with the background of the situation that we see, the ongoing processes that we see in the United States economy and global politics, everything points that it will not too much time to wait when really big changes will come. So, and actually on the background of the recent week, we just have another opportunity to be sure with it. So when you read the report, you will see. So actually what's going on currently. So that's why actually on the higher time frames, on the weekly and the monthly chart, we do not have really big changes. The most important thing for us on the common week is the 19 even area. by a few reasons. First of all, this will be confidence support on the weekly chart, and it's accompanied with the daily oversold, and it really put the good foundation for possible upward bounce. So that will be primary area where we will start searching for any short-term intraday bullish patterns, because pullback might be more or less significant. Because the weekly chart, weekly support, so usual reaction on the weekly support areas, especially when it's confluence, more or less solid. Besides, here we have other signs that point, particularly on this level. This is the butterfly target with a 19 even 1618 extension. We talked about this already. Oversold once again. Speaking about the intraday chart, so we'll take a look at the hourly chart. That's the ABCD pattern that we already talked about as well on Friday, and it also has XOP in this area. So the pullback has happened on Friday, but it very soon have been reversed, and you can see market has collapsed right back down. Very probable that we will get some kind of the final of this downward action in the way of the butterfly. This very often happens. When the market prepares the background for a possible bounce, it very often happens with the butterfly, because butterfly simultaneously downside, continuation pattern, and reversal pattern, and butterflies very often becomes the part of the hand and shoulders. You have seen it a million times already in our videos. So, based on this performance that I see, it's very probable that we could get a kind of the butterfly. So maybe if you trade on a very short-term time frames, on a 5-minute chart, for example, that might be a separate scenario for taking the position, take some trade, dealing purely based on this butterfly. But it's very short-term. What we have currently is that actually, if you're still holding short position, you could do this until this area, while we start watching for the performance of the market when the 90 even area will be reached. So once some really acceptable bullish reaction will be formed, we could try to use it for possible taking the long position. So this is the major idea of the coming week.